trade the hard time frames liquidity shifts, and in this video we will not go over the basic trend following strategy. And what I mean by this is, if you're new to our trading community, of course, when the market is let's say moving in the bullish structure, of course the conservative trend following strategy is waiting for the market to retrace into some hard time frames PD area, and when the market comes to those areas, you want to look for lower time frames market structure shift in order to participate into into potential next leg up higher. In this video, what you will learn is how you can trade also those retracements on the way to the downside, those retracements to actually target the next levels of PD area. In this case, I will go over the euro-US dollar time frame. So basic strategy is of course focusing on the hard time frames, understanding the market structure, pointing out the main price action, focusing on the highs and the lows, and when the market comes back to those levels of hard time frames PD area and retrace, then of course you want to look for potential continuation higher. In this case, of course, we are looking, as I said before, we are looking for a retracement back into, let's say, discount areas or in combination with fair value gap levels, and we want to of course look for potential opportunities when the market is in the retracement mode. We want to look for lower time frames structure shifts in order to participate into next leg up higher. However, in this video, what you will learn is how you can also trade against the major and how you can actually look for those retracements, how you can trade those retracements here before you start looking again later on for of course the trades to the upside. So now let's go over the euro-US dollar. So here on this time frame, on the 4-hourly time frame, I marked the important levels. So in this 4-hourly time frame, what do we notice is of course a clear bullish structure. That means that market is creating higher highs, higher lows, and as I said before, this is a clear sign of bullish structure. Now, of course, within this structure, we can always trade potential retracements also to the downside. So if you are not focusing just on the main trend following strategy, as we explained before, you can also trade those retracements on the way to the downside before you start looking again for opportunities to the upside again. Now, this is the 4-hourly time frame, as we said before, and I want you to focus on those on those levels. I marked those levels up for you to understand better visually, and I marked those levels up, and the text says 4-hourly buy side liquidity and also the previous day's highs. So as you can see on this 4-hourly candle, this is the last 4-hourly candle for that day, and this was also the high of the day. This candle is the same. We have 4-hourly buy side liquidity, previous day's highs, so this was the top. Here again we have 4-hourly buy side liquidity and previous day's highs, and this is from the Friday, from yesterday, which is exactly also the 4-hourly buy side liquidity and previous day's highs. So this level up also. And why are those levels important? So if you have like a bullish structure and market is creating higher highs, higher lows, in most cases, in a lot of cases, price will form a new high in the bullish structure, and this is why I wrote those levels up. We have 4-hourly buy side liquidity and previous day's highs, and in most cases price will form a new high and then it will retrace a little bit before end of the day. And when you are in the bullish structure, what is the market objective? The market objective is to continue moving higher and to approach those levels again on the following day. This is the objective. Not, of course, in the same day, but it can happen in the same day. And this is the area you want to look for, to target for. And in this case, of course, when you have like market moving higher, creating the high of the day or the 4-hourly buy side liquidity in this example, of course, market will retrace a little bit at the end of the day. And then what will happen in the upcoming trading session, the Asian session, overnight session, price will try to, let's say, range a little bit. Of course, not always the case, but in most cases, price will give you some sort of range in the Asian session. And as you're coming to the London session, of course, what you can look for is for potential market sweep. Let the market go over this 4-hourly buy side liquidity, previous day's highs in this example. And then what you're looking for is you can look for possible structure shift in order to trade potential retracement. And with potential retracement, what you can target for is the next area of premium and discount. In this case, you can look for 1-hourly or 4-hourly time frames in order to target those levels. And when you come up to those levels, if you are looking for short setups here on the lower time frames, when the market comes to those areas again, you can again look for classic trend trades again to the upside. And we will go over this week's price action. As you can see, those are the levels you want to pay attention to. And let's go to the first one. So this is the previous day's highs for our buy side liquidity, and all those levels are the same. Now, if you go to the 1-hourly, what do we see? On the 1-hourly, we again see the same thing. So we have 4-hourly buy side liquidity, previous day's highs. 4-hourly buy side liquidity, previous day's highs. Same here. And those are the levels that you want to pay close attention. What happens here? So market moved higher, at the end of the day it retraces. Move higher, at the end of the day it retraces. As you can see, this pattern is repeating. As you can see, we have price moving higher, retracing a little bit overnight. And I want you to pay close attention to those levels. And when you pay close attention to those levels, such as 4-hourly and previous day's highs, the daily liquidity levels, then what you also want to pay attention for is the Asian's range. So we have buy side liquidity and we have this Asian range. So we have Asian session low, Asian session high. We have 4-hourly buy side liquidity here, and then we have the Asian session range. We have this high and the low. So you can see I wrote the text here, so you have clear, of course, clear picture of it. So we have Asian session low here, we have Asian session high. So why are those levels important? Because in most cases, in a lot of cases, not every day of course, but in Asian session, what you would like to see is of course price to form this kind of range. And as you're getting closer to the London Open, of course, we come up from this accumulation into potential manipulation and later on the distribution. This is the 4-hourly buy side liquidity, previous day's highs. So we don't have a clear range here, but price moved quite a lot. We have this kind of accumulation. In this case, price moved up few 10 pips. Then we have this manipulation in the after London Open, and then we have this distribution to the downside. 4-hourly buy side liquidity, previous day's highs here. We have Asian move here, range. As you can see, we have move up to the upside, and in this case what you're looking for is potential manipulation above this 4-hourly buy side liquidity, previous day's highs, in order to trade potential retracement to the downside. Why? Because when you see this retracement later on to the downside, market approached this next hard time frames PD area, 1-hourly discount area, 1 hourly fair value gap zone, and this is where you can again look for potential opportunities within the trend in order to target either the highs of the day or potential next leg up higher. Now, when you can trade those potential setups to the downside, well, after London opens. You want to focus on potential setups in the London trading session, and you can focus on, I would say, I really like 50-minute time frames. You can also focus on the 5-minute, for example. If you combine those time frames, you can really find nice opportunities to trade to the downside. So let's just go to the few examples on the 50-minute time frame. For example, here we have Asian range, and as you can see, we have, if you like to trade, of course, you can still, when you have like this Asian session range and London opens later on, you can still look for long trading opportunities targeting this buy side liquidity, because in most cases price is attracting to those levels. It's like a magnet, and in this case, if you zoom in a little bit, let me go over this one, you can see we have price moving higher. Ideally, of course, you would like to see Asian swept, but this is not the case. Not every time you will get a sweep, and then later on, as you can see, we have nice 15-minute fair value gap zone structure is clear, and whenever market retraces to those levels, the objective is, of course, to take this liquidity out. And when this liquidity is out, then of course you can look for potential opportunities again to the downside, targeting the next hard time frames PD area, in this case the 4-hourly or 1-hourly fair value gap levels, or order blocks. So this is a clear example how you can trade within the trend and how you can trade also those retracements to the downside. When you focus on the hard time frames liquidity levels, when you combine it also with the Asian range and hard time frames PD areas in order to understand what you're trying to target here. And here on the on the next day we have also 4-hourly buy side liquidity, previous day's highs. We have range, not quite a range, but in the Asian session price moved up, and then as you can see it took those highs, and then later on you have this kind of a structure shift to the downside. So if you are looking for potential setups in those levels, you have to be really careful of 1-hourly fair value gap levels at that level. So for example, let's actually go to the 1-hourly here on the 13th of February. So on the 13th of February, as you can see, here you had some fair value gap levels here, and also, as you can see, inverted fair value gap zones which work as a resistance, as you can see here and here. And then you had also the fair value gap zone here. So in this case, you had to be really careful. For example, here, as I said, you had inverted fair value gap zone, you had bullish one, and then you had bearish one, which price actually retested, as you can see, and then it moved to the next levels of PD area and retraced back towards the 4-hourly level. So in this case, you have to be careful when you're trading against the main trend. It must make sense in terms of risk and reward ratio. There must be at least 1-to-1 in terms of risk and reward ratio. And if you focused on potential short setup here in order to target the next levels of hard time frame PD area, then when the market comes to those levels, as you can see in this case, we took the Asian sessions range low, we spiked at the news, and then we formed a shift to the upside. So in this case, if you are looking for 15-minute or 5-minute time frame opportunities, then of course your idea is to grab all those liquidity levels, the previous highs, where the traders are having all those stop losses, and this liquidity will try to, the price will try to grab this liquidity back towards the previous day's highs and the highs of the day. The next example is from yesterday. We had this 4-hourly buy side liquidity, previous day's highs. We have this Asian session range, it was ranging, and then as we're getting closer to the London Open here, the overall structure was bullish, as you can see, but idea was of course to to look for potential manipulation in the London session in order for the market to retrace back into the hard time frames PD area, in this case the 1 hourly fair value gap zone, where you can also look again for new opportunities to the upside again. So from yesterday I want to give you an example on this move. So let me bring up some charts, how you could trade this retracement to the downside. So when we were in the London session, we had this leg up higher. So we had this leg up higher, market broke the Asian session highs, it took this 4-hour buy side liquidity, previous day's highs, and if you would like to trade potential move to the downside, potential retracement back into the hard time frame speedy area, then of course you could focus on the lower time frame, such as I said, 15-minute time frame or 5 minutes. So let's go over the charts. This is what we had, for example, yesterday. This is the combination of 15 and 5 minutes. So if you don't like to trade 5 minutes, you can just focus on the 15 minute and you will look for potential structure shifts to the downside. So as you can see, here we had really nice structure shifts on the 15 minute. As you can see, we have this kind of a double top, and then we had also nice shift on the lower time frames. 5 minute, we had nice fair value gap level, we had nice confirmation, and idea was of course in this case to target the 1 hourly PD area. In this case, as you can see, this level we had nice move to the downside, and when the market reaches again this 1 hourly PD area, the fair value gap zone from the 1 hourly, in this case here you can again look for opportunities to the upside, either on the 15-minute time frame or 5 minutes. So as you can see, in the New York session we had nice shift to the upside, price broke all those previous highs. So on the 15-minute time frame, what you would like to see is of course price to retrace back to those levels in order to target the highs of the day or the new leg up higher. So in this case, the only setup you had was on the 5 minute. So if you have time and if you like also 5 minutes, as you can see here on the move to the upside, we had a nice shift to the downside to target this 1 hourly PD area, and then in the New York session you had nice shift to the upside with nice fair value gap levels here, nice discount area in order to target the highs of the day again or potential new leg up higher. So what you can do in the next week, based on the current market picture, of course, based on the current structure, this is the 4 hourly time frame. As you can see, the 4 hourly time frame, we had this previous day's highs here, the same thing as we had here and here. Buy side liquidity is created. So what you can do on Monday, if you get a setup, of course, you can look for the same thing. You can wait for, let's say, Asian session range here. You can wait for market to take these levels up, and then if you see like a structure shift after this liquidity is taken, you can look for a potential move lower. And when the market comes back to some levels of PD area, then of course you can again look for a potential market structure shift again to the upside in order to trade potential long setups, again targeting the highs of the day and the previous areas. So hopefully this video was helpful to you. Make sure you revisit it again a few times in order to understand how we approach the market, how we trade, and this video will be helpful for your own trading for sure. So thanks for watching, and we catch up soon.